This is Teddy Keckstead from Forex Trading Unlocked on January the 9th, 2020, and we are here with a daily Forex market breakdown for you, and we're going to just show you our disclaimer real quick to remind you that this webinar is for illustrative purposes only. And with that, we'll jump to our live screen, and here we are at the Forex-Trading-Unlocked.com website, and we are on the workstation page, which you can access from the top menu bar on any page. And let's take a look at what's going on with the numbers for today. So we have for the Japanese yen, foreign reserves, overall comprehensive risk, leading indicator, and coincident index. Those numbers actually may have a little bit of an impact on the Japanese yen. So we'll take a look at that in a little bit. And then tomorrow, of course, we have unemployment for the Swiss. We have employment also for Canada. We have average earnings, labor force, non-farm payrolls, and unemployment for the United States. So we have the US dollar, the Canada, and also the Swiss, which have some interesting and strong, very strong economic numbers coming out. So we have the Euro US dollar chart already pulled off, and we took off the news and the volume. And we can see where the Euro US dollar is right now. Okay, so as you can see, this last higher move high, we have an arrow pointing at that following day. That was a bearish engulfing line sell signal, which the market has now fallen into our downside target range. And coincidentally, all of a sudden, the news in the Middle East has seemed to somewhat be quelled a little bit. So we'll see what happens. We know it's not over, but at least right now it seems like the fingers are coming off the triggers, which is nice. So what do we have to pay attention to here for coming up for Brexit besides the we spoke about? Well, we have Brexit coming up on January 31st. And then since the tensions in the Middle East are starting to calm down, I guess, we'll see what happens over the course of today and tomorrow's trading day. But since we've hit our target range, and remember, this market is in a bull market. It's a slow grinding bull. And just a week and a half ago, we had made this last higher move high. Okay, so right now, no matter what, fundamentally, we have higher move highs, we have higher move lows. So unless this low right here is taken out, I would say that we're going to find some very strong support here, and we have a good chance at not necessarily going to take out this last high, but rather we have a very good chance at definitely getting a higher move in the Euro US dollar over the course of the next couple weeks. Now remember, we have Brexit coming up, so how far of a move can we really expect? Well, since the political stuff is pretty much done, and we know the date is set for January 31st, in which that's when the Brexit will start. And then we have until December of 2020 for them to figure out the trade rules between the EU and the UK. So what we have noticed is that when we've gotten close to these Brexit dates, that not only did the British pound, but also the Euro US dollar would start to settle into a sideways trade. The market's already been, even though it looks like it's been swinging around and trending pretty nice, the ranges have been pretty tight overall for as far as volatility is concerned. So if our target zone holds here and support is found, then we're probably going to end up being sideways going into January 31st. So don't get overzealous being a bull trying to buy into this. I think that if you have been a bull and you are bullish to Euro US dollar, now you're looking at an opportunity to buy at a decent level. I think only if you fail from $1.1079, that's this caramel level right here, which then starts to take out this last higher move low, then we'll be pressuring the upward sloping blue line here, which is holding the trend intact. And then a failure there obviously would indicate that the bears are taking over control. So since we started off with the Euro US dollar and mentioned Brexit, we're going to fade into the British pound US dollar. And as you can see, this market is definitely range trading. So since the middle of October, when we had this little basing area, we broke out and then we fell back on it, and here we are trading just above it once again. So I think that since we have Brexit going on, unless you take out this $1.3517 where this last higher move high was, or this $28.99, basically $1.29, area where this last higher move low was, we're going to most likely see sideways here. So range trade conditions is the call until Brexit, especially since the Middle East stuff seems to have calmed down. So since we have a little bit of indecision going on because of Brexit, let's talk about the U.S. dollar Swiss. Now, the U.S. dollar Swiss, the Swiss and the U.S. dollar are both flight to quality currencies. Because of the Middle East thing, we definitely saw a little bit of a rally in the dollar, and also the Swiss was strong against other currencies. It started to set a base here, the dollar versus the Swiss, as this new little Middle Eastern turmoil had started to unfold. Now that it seems to be neutralized, at least in the short run, I think that the Swiss, which is always a flight to quality currency, is probably going to start to become bullish again, meaning that the U.S. dollar Swiss most likely is going to start to fall back on support. This trend is an aggressive downward trend. In fact, if you look at the slope here that's been maintained over the past couple months, it was only this military stuff that took us back up on this trend line, and here by attrition from today we're out of it, we're above it, but we're pressing the lows. So today's close, and remember tomorrow you have unemployment. It'll be interesting to see where the tug of war between the dollar and the Swiss actually goes. To give you a bearing on strength though, let's look at the British pound CHF. So we see a neutral pound versus the dollar. Look at the pound Swiss. So this looks very, very similar to the U.S. dollar, or the pound U.S. dollar. Now let's look at the British pound versus the euro and see where we are. So the British pound versus the euro, this looks almost like an identical chart. So the British pound U.S. dollar, like I said, the pound is being neutral going into Brexit. So only a major shakeup in the Brexit conditions, I think, would have the pound really having an excessive move. Now, once we get through the January 31st date, whether sideways is the call or direction is the call, we'll have to see. We have to look for a valid move. Right now, we are in a bull trend that has gone sideways right now. So it's neutral to higher. So expectations would probably be more towards the upside than the downside. But you follow your higher move high and your higher move low. As long as it's, like I said, this $1.28.99 area holds, we're most likely going sideways. And if we break out above $1.35.17 up here, well then obviously game on, bulls are back in town. So we'll see how that unfolds. Now let's look at the US dollar Japanese yen. And this is very interesting. As the dollar seems to start to wane against some of the other currencies, the dollar yen, what an explosive rally we've had over the past two sessions, setting this higher move low yesterday, and now we are back pressing this downward sloping resistance line, which is almost flat. This is heavy resistance here. And even when the dollar, we've been talking about this for months, when the dollar gets hit, the US dollar yen typically doesn't really react that harshly versus the dollar. In fact, sometimes it's higher. And then when the dollar starts to rally, boy, does this thing start to get a pop. So it's very interesting to see how this market bounced literally in the past 24 hours. I mean, we were down here at this low, and this becomes our new higher move low here. This is $1.763, and now here we are back at $1.953. Yesterday we were over $1 higher when we came back above this upward sloping support line, and then still kept on going into the close yesterday. And here we have some aggressive follow-through, just butting up against some strong resistance. So this is good. Remember, phase one of the U.S.-China trade deal is coming up on January 15th. So just like we have Brexit going on in the European zone, we have this going on in the Asian trade zone. So what happens there is definitely impact the yen, and then it's really going to impact the Australian dollar, U.S. dollar. So this market has been in a little bit of a free fall. We had a little sell signal. This was a bearish engulfing line that occurred after the first of the year. And then now we've had completed or almost completed our target range. So the excessive sell-off point is right at the bottom of this ellipse. We're coming into the January 15th deadline, so the fact that we're kind of right above it gives us a good opportunity to start looking for maybe a place to buy. Only a failure here of this Carmel line here at 68.08, that really would start to unhinge this market. But like I said, with the trade deal and with the way the dollar seems to be coming off of this Middle Eastern thing, I think you're going to have a good chance at getting a buying opportunity in here. So this is more likely a corrective break right now, not the beginning of a bear market, especially if things in the Middle East stay calm, and then also the China trade deal phase 1 does get signed on the 15th. So we'll see what happens in 6 days, right, folks? All right, so New Zealand dollar, US dollar is the next currency we're going to take a look at real quick. This market also has exhibited a sell pattern, a sell signal on the first of the year. This is right here, this first red line after this higher move high. This market has been a very aggressive bull. Even when the dollar started to rally against other currencies, this one kept on going the other way. So the fact that it's pressing lows today right now, well, it's had a very strong upward incline. So markets, remember, they go out like they go in. So it went from being a nice little creeping along, nice working hard rally into something that started to really boost extremely, especially in the December and into the holiday markets. So this is probably a good corrective slide profit taking move that's going on right now, especially because the fundamentals and geopolitically are interlocking with the technicals really well. So it sets this market up to come down into this upward sloping blue line and right into our target zone. I don't think you're going to really get below that very much. Anything can happen. We could drop a little bit lower, but I think this lower Carmel line at 64.39 is probably your extreme for any slide. That will be our neutral to downside bias. Anything above there, we're looking for an opportunity to buy. Now remember, we had this sell signal. It still has a little bit of a distance to go here. So just like some of the currencies have already hit their trading targets, remember the volatility in those markets has not been as extreme as it has been in the New Zealand dollar, US dollar. So now we're going to look at the US dollar Canada, which looks very similar to the Swiss. And look at this little rally. This one's really charging through. It's kind of funny. Some of your lesser major currencies, like we looked at the Swiss, we looked at the Canada now, we're looking at the yen, and even the Australian dollar and New Zealand dollar, they're the ones that are moving, whereas the pound and the euro, because of Brexit, I think, for the most part, they're exhibiting this. Unless we have a real reason to spark a move, they're not really going to. So it's going to be a range trader's delight for those, not necessarily good for swing traders. US dollar Canada, we're coming up towards this Carmel directional bias line. This is a strong pivot for this market. This is a pretty extreme target, and that's probably because of the extremeness of this slope that we've had over December, breaking into the beginning of January. So we have a nice bottoming phase, and we had made a smaller higher move high, then we made a higher move low, now we continue to make a higher move high, and we're pressing this area. So I think that we're going to start to run out of gas up in this spot right here, right above $1.3138 up to this $1.3182. This is your resistance band that I think is going to be pretty strong as far as keeping the market at bay. This would also coincide with the fact that the dollar seems to be in a bearish corrective mode, even though it's been rallying because of the Middle Eastern conflict. Now that the Middle Eastern conflict is starting to subside, oil prices are coming back a little bit, markets are still strong. It's a good indication that the US dollar is most likely going to get a sell-off over the next few sessions. Now remember, we have the unemployment numbers that are coming out in the US and a couple other countries, even the Canada. So we have those numbers that could most likely, since they're on the table, today's move, since it's 9:30 and the US markets are already open, we probably are going to start to quiet down for the rest of the day. So anything can happen, obviously, but I think that your momentum is pretty much done for direction, and everyone is going to be hinging on a lot of what's going on with the Middle East and what have you. They're going to try and balance things out. This has been also these moves right now that we had those sell signals and buy signals in. These were all for corrective patterns. And right now the trend for the US dollar Canada is still bearish. This is right now is just a bullish correction right now that we're looking at. And once again, if we get above this $1.3110, we come off the bearish trail, but then we're only neutral. We're not bullish by any means. So we'll see what happens with that. Now let's go back real quick to the euro US dollar, because I want to show you how that extreme difference is. Look at the euro US dollar. Today's range is $1.1120 down to $1.1096. That's a 24 pip range. 24 pips. That's the range for the euro US dollar. Now let's go back to the euro or the US dollar Canada. So for this we have a low of 130.26 and a high of 130.91. Okay, well you can do that 65 pips right there. Big difference in volatility in the US dollar Canada and the euro US dollar. So you can see how Brexit is definitely a factor here, and if it is a factor in the euro, it definitely is a factor in the pound. We looked at how the pound versus major currencies, all their charts look identical, meaning that pretty much the pound it's in a neutral, very, very sideways range trade condition right now. So for your swing traders and your range traders, what markets? Let's do a recap. If you are a range trader, the euro versus the dollar, and then the pound versus most major currency crosses is most likely set up for sideways conditions for the next 2 weeks. As far as chances for some trends and some swings, we have the US dollar Canada, we have the US dollar Japanese yen, we have the Australian dollar US dollar, we have the New Zealand dollar US dollar, and we'll see what the dollar index does. Remember, the dollar index is right now in a corrective rally, but overall it's looking like it wants to be a bear. The beginning of a bear trend has already started over the past few months, and there's no reason to think that any of these trends are not going to continue. We've had all these signals that we pointed out, and that most of them have hit their targets. A couple are coming close. If these are corrective moves, that goes right in hand with our dollar weakness that should start to come back into play, especially since the Middle East fundamental is now not off the table, but definitely relaxed. And then if the price of oil also starts to come down, that also will help to subside some things as well. So if you want to learn about these sell signals that we were talking about, these bearish engulfing lines and how to trade them in the Forex or the futures or the options markets, read the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in Kindle and in paperback version, and you can find it on our website here at Forex-Trading-Unlocked.com. And if you want to know when these signals occur and you want to see the videos and what's going on with them, then just subscribe to our YouTube channel and you'll be notified every time that we stream. So with that being said, I'm Teddy Keckstedt for Forex Trading Unlocked. Please come and check us out at our website at www.forex-trading.com every day. Take care.